Welcome, everyday investors. Took a little bit of sick leave last week following a kidney stone surgery. It's horrible. You never want to get it. And unfortunately for me, there's no guest for me to lean on for content and no meat for me to chew into in terms of learning. So fortunately for you, though, I do have something to say. I can promise you that. Now, some of you may prefer entertainment, but I prefer learning stuff, and sometimes that means during times of forced inactivity, like recently for me, like sick leave, maybe for you, occasionally, you need to sort some things out in relation to the direction that you're heading. And for me, it was mainly to do with my business that I was kind of concerned with, that I took the opportunity of this time to really focus on it, and the overall strategy, and even the purpose of the entire thing. So I sat down with myself at the start of this year, and I got stuck into some serious goal setting, because we know goal setting it's great for you, right? So let's do some goal setting, not just for the year ahead, but for me, I wanted to specifically plan the next 7-year period. Now, I know roughly what I have to give, and I have a pretty clear picture of why I'm doing what I do too. The whole goal setting thing, though, is becoming more clear during this time for me, the more attention that I give it. So I'm a massive believer in goals, but I'm also really good at being human and falling short and in trying again without feeling too bad about it. The environment or the conditions for achieving goals can change through time, right? We're seeing that right now in all areas. It might occasionally require larger investments from ourselves just to keep going in the area that we're involved in, for example. Now, I feel I need to double down to reach my destination with the amount of resource that I previously thought was going to be enough. It's now more. I think I need more to do what I really want to do. And how can I do all that while maintaining balance in all parts of my life? That's pretty tricky. And when you're already giving all you have, it's really hard because you can't imagine where you're going to reallocate time from. But sometimes we also kind of just need to be honest, right? Maybe the conditions were just easier before when you set your goals last time. And maybe we started to take credit for rising property values and portfolio values as if somehow it was our interior design skills or our stock picking skills that really pulled it off. You really want to aim high with your goals, yes, but there seems to be a hidden cost with aiming too high. And it comes in the form of volatility or the uncertainty that what you do will always generate the return that should be yours. So today, if you're an everyday person, then my purpose here on earth is to help you get wealthy any way I can, including in this episode. So in this episode, I want to share a part of my financial strategy framework that I've been using with some of my clients over the last 6 months now. And it's a framework that you can use to help maximize the chance that your actions are linked to the reason why you have goals, more than what your goals are. Now, it's a triangle with 5 horizontal sections. Purpose at the top, then goals, strategy, tactics, and finally action, where the majority of us start. So it's not a paint by numbers or sequential step-by-step exercise. It's an all-at-once thinking exercise because goals are not enough. You need a strategy. And how are you actually going to achieve things unless you've actually done the work around the edges? And I'm already working as hard as I can. I have limited resources, including my time, and I'm tackling this all at once because I believe by aiming for more, your hard work makes sense when you're thinking about risk and returns all at the same time. You sharpen up and you may get a better return than some because you're measuring it in overall life happiness, not just your account balance. Now, do I take more risk? Well, every good time results in a period of bad times. And after a while, the bad times reaches like a crescendo, I guess you could say, or the trough of a valley. And this is the literal blood in the streets moment. And you're just going to stand there? Come on, take action. Now, these are pretty much my thoughts in the moment, especially when I force myself back to my own strategy. Actions aren't about things out there, just robotic things that you do without thinking about. They should be the practical outworking of who you are, which is actually tied to a purpose that you've spent some time thinking about. So today I want to go over all these 5 sections one by one, share some thoughts on it, and then share a little bit about where I'm at with it also. So this is for all of those that are probably already maxed out, doing all they can already, or they think they are, but they're also increasingly aware that the future ahead might be a lot more expensive than they anticipated. Sound good? Let's begin. You're listening into the Everyday Investor Podcast. Passive investing, property investment, managed funds, and crypto. If you're an everyday person wanting to build new wealth for the new world that you're heading into, then this podcast is for you. I'm Darcy Ungaro, your host. I'm a qualified financial advisor, but I'm still learning how to invest better and teach others how to do the same. I talk with guests and cover a range of topics designed to get you to think for yourself here. But please keep in mind, this can't be considered financial advice. Be sure to do your own research here and seek qualified advice of your own before making investment decisions. If you want more information, check out the show notes in your podcast player and make sure that you've subscribed to YouTube also. Then follow The Everyday Investor on all social media channels. The NZ Everyday Investor podcast receives support from the following partners: Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand; Gorilla Technology, increasing business success through innovative and strategic IT solutions; Ungaro & Co. Financial Advice for everyday people building everyday wealth. Hope you enjoy the show. Let's get started. Welcome back after that introduction. Now, I want you to imagine a black box. Imagine wrapping up some of your time and some of your money and then chucking it into that box. Magically, more time and money comes out of the other end. That's kind of like what we do when we go to work or when we're involved in business. We believe that by doing so, by putting our time and our money into this box, that we'll get more than what we put in, our labor and our capital, or perhaps a bit of both. Das Kapital, or wealth of nations. Now, a great example of this is Michael Saylor with MicroStrategy. He's basically found a way to put less in than what he gets out. He's trading bad money for good money. Now, it's also a strategy that everyday investors can literally use to manufacture wealth. Just put in less than what you take out. Like any successful business, you want to see revenue grow faster than the cost of getting that revenue, right? So it's kind of like that. As long as every dollar that you put in gives you more output on the other end, you keep going. Leverage is kind of similar. It's about using a small amount to force a better result on the other end. Now, I know I'm stating the obvious here, but you don't want to put in any more than what you get out. It's simple, but often when things get tough, we tend to double down on strategies that only worked in the past. And the trick is in knowing the best strategy for the future. So if you're listening into this episode, I like to imagine that you're probably not too dissimilar to me. You feel a responsibility for providing for your family, and you know also that it doesn't feel as easy as it likely would have been in our parents' generation. And you want to find ways, therefore, to optimize how much time and money that you're forced to jam into your own black box. You want to get a good return, and you want to figure out ways to put in less than what you get out. That is an investment strategy. Now, zooming out, we see that there is a vast horizon full of these black boxes with everyday people running it themselves, each with their own unique approach to dealing with the mercurious Mr. Market. Falling property values, lost contracts, missed commission, and days not paid increasing. This is the fallout that happens every now and then, and our strategy needs to help us get us through it. But I kind of find that it's sometimes challenging to keep going with the right set of actions when you're doing it on your own. There's nobody all around you doing it the exact same way that you're doing it. So no matter what you do, unless you're an absolute clone of whatever you think normal is, you're never going to feel like you're actually going down a path that's well trodden. But here's the cool part. When the amount of autonomy you can insert into your decisions is high, and if you're ambitious, you can actually see glimpses of the cyclical nature of the market, and you can learn when things flip and when it's most appropriate to double down. Often, it's right in the guts of those tough times. That's intelligent investing, right? But it's really tricky just doing that on the fly if all you've ever done is read a book on it and promised to yourself that you would remember these principles when the time is right. How can you do that unless you're looking at it all the time, right? Now, if you started out investing, if you've achieved some success, whether it's in your own business or just in your portfolio or your career, but you feel like you're missing a little bit of structure, then keep going. You will figure it out as you go, especially if you increasingly become aware that structure can help you. But you can also start to build a structure yourself. And this is the tool that I use, and it helps you keep moving when things get murky. So the 5 sections in the hierarchy of financial decision-making, I know it's not a very sexy title, are purpose, goals, strategy, tactics, and actions. So starting right at the base of this triangle, we have action. the quantifiable set of behaviors like how much to invest, which is consistent with your tactics. Actions are the specific execution or implementation of your tactics. For example, I will review my budget monthly on the 28th of the month, and I'll transfer 80% of my discretionary income, or $183 per week on this date, to my revolving line of credit mortgage account from this account suffix to that account suffix. I know, really obvious stuff that you probably just do anyway, but the whole idea in documenting your set of actions, kind of like as if you were to die or enter into a coma, someone could actually pick this document up and read it and actually keep on going with your investment strategy, because everything that you do is documented somewhere, and it's paint by numbers if someone finds it. Most of our actions are determined based on our belief that we are acting in accordance with someone who would behave in a similar way to us in the situation that we find ourselves in. It's really hard to say that, but what I'm trying to say is that more often than not, our actions are just reacting to our environment, instead of actually being a purposeful set of motions that we are absolutely in control of. So by documenting your actions, you're going to have a quantifiable set of behaviors consistent with your tactics, which we'll cover next. So this is just the specific execution or implementation of your tactics. So what's a tactic? We're moving up the triangle. A tactic in the hierarchy of investment decisions sits right below goals and strategy. Tactics represent the specific instruments that you're going to be using in your financial strategy. They might include activities, or they might include decisions that your strategy demands at key times. The tactics are the procedures that you will adhere to, or the tasks that you must accomplish. And they're also the tools that you might be investing with. So in essence, tactics define the what with of your strategy. Now, if you're trying to figure out what your tactics are, you could just look at your actions and go, well, what kind of tactic is that familiar with? For example, I keep on transferring $150 per week to an index fund that tracks the S&P 500. Well, I could probably infer from that maybe you are a index fund addict. And I can also make the assumption that you're relying on a tactic known as dollar cost averaging to buy the same amount in dollar terms of your investment every month, no matter what the unit price is of that investment. But it's also really important just to ask yourself some tactical questions like, what are the investment platforms that you feel comfortable with using? These could be even your KiwiSaver providers or advisors that you go to when you're making KiwiSaver decisions. They could even be digital wallets that you use for your digital assets. Now, what proportion of your money should be allocated to each investment as part of your strategy? Well, this is where your tactics fit in. It's actually the amount, or it's the recipe, if you like, of how you're going to allocate your investable money every month. How will you monitor and evaluate the financial performance of your investing? These are tactical questions. An example could be, I will complete a budget and track my spending to ensure that 80% of my disposable income is being spent on extra mortgage payments. I will then review this annually and be accountable to my partner or even a trusted friend. So that's a tactic, but in the previous example with action, we talked about the actual dollar amount on what date. So that's an example of how it's the execution of the tactic. So number 3, we have strategy. Now, financial strategy is a custom built. By custom built, that means you're building it. It's not a template that you insert into your life. It's a way that you approach it. And it's there to help you achieve your goals that are aligned to your purpose. A strategy might be a methodology based on principles or laws of money, which you can take into account in the world that you can't control. Your financial strategy will likely contain several sub-strategies too, all connected up, or some of them even operating autonomously. Some will have completely different goals than your other strategies. Now, if you're trying to think about what your strategy is, it's kind of about figuring out what the strategy is that you're already doing when you consider your tactics and your actions. Like, for example, you know you're a property investor when you keep on buying investment properties and there's money going into all these accounts, propping up all these investment properties, right? So clearly you're a certain type of property investor. You're a property investor that's targeting capital gains, and you're not afraid to lose some of your cash flow in that pursuit. That's your strategy. Now, strategy is what gives your tactics focus. Another way to discover what your strategy is, though, is just to ask yourself, how you will achieve your goals. One of my strategies that I use in my life, more so than just my investment portfolio, is actually just taking a portfolio approach to my time, because I want to grow wealth across multiple fronts simultaneously. So I have to allocate my time in each category quite specifically, and I have to set very hard boundaries on what I will and will not allocate my time to during the week. I use tools like Calendly to determine which types of meetings I'm willing to have during the week, and I'll limit those meetings in order to get the best rate of return across the portfolio approach of my time. Another strategy that I use is I will talk through all types of media about the 20% that the 80% wonder about most of the time. If you're one of those people, then welcome along for the journey. Now, I'm also going to invest like yesterday will soon return, but I'll anticipate a different tomorrow at the same time. Another strategy, I will play the long game. I will give, and then I trust that I will receive and I won't take. That strategy is something that I implemented ages ago, and it's working well. So my action, I'm going to allocate 80 hours per week, working, learning, and talking as much as possible in ways that are consistent with my strategy. I will spend the remainder of my time with my family or sleeping. I'll invest 10% of my income, and a really good book to read on this, by the way, would be The Richest Man in Babylon. I'm reading that again at the moment, and it's awesome. I'm going to give away 8% of my turnover. Again, I've been doing that for well over 25 years now, I think. And I'm going to spend about 40% of my net income on mortgage payments. Until the age of 55, I'm going to spend 5% of my income on life insurance, medical insurance, and trauma insurance. And finally, I'm going to spend more tax every year until retirement. Because I like tax, but because I like the income that goes with it in this world. So that's just a picture of my strategies that I follow and some of the actions that come out of those strategies. So now we've covered the actions, the tactics, the strategy, and what's next in this financial hierarchy of decision-making, goals. So we're getting really close to the top here. This is the part that most of us like to think about when we get our ambition on. It is absolutely critical to have goals if you're looking to build new wealth for the new world, but it's not all that you need. Goals, what are goals though? Well, there are the specific events or outcomes that you wish to achieve or expedite within a defined time frame. Stuff you want to get done. So achieved goals are the markers that reflect the fulfillment of your purpose. So goals should be SMART. You've heard this before, but it's true. Specific, measurable, achievable, relevant, and time-bound. So to figure out what your goals are, ask yourself the following questions. And again, this is something I would totally recommend that you write down. What do you want to have, do, or be in the future? Will it be possible to know that you have achieved your goals? Are your goals realistic and within your control? Do your goals align with your purpose? That's next. When do you want to achieve your goals by? So these are some of the questions that you would ask yourself when you're trying to define your goals. So you might want to write down, my goal is to do something by a certain date because, and that's the reference to what your purpose is. So examples, my goal would be to retire by age 55 because I want to show my family that it's actually possible to keep more of your good time. My goal is to start a business which replaces my day job by age 45 because to help others in this area, I need to first do it myself. This isn't me, by the way. I'm not 45. Or my goal is to buy a home by the age of 30 because I want to be debt-free by age 55 because then I can invest more because then my children will have a head start building wealth because no one in my family has ever retired with enough. I know that's not really very good English, but this isn't an English test. This is putting down your goals, right? So be as specific as you can. Put them down there. And if your life is out of control occasionally, which that happens, right? Just look at the thing that you really want to hit, and you're more likely to hit it. That's goals. So let's get on to purpose. A purpose is the reason why you've been put on this planet. It's what provides meaning. And it's for whom do you live? Most of us fear to go there because it just goes a little bit too deep, especially in an area which we believe is the epitome of materialism. Dollars, our account balances, the sense of financial security. We don't want to mix that with the core of who we are because that implies that we're either going to succumb to laziness or greed. And no one wants to be a lazy, greedy person, right? So think about it like this, though. What cause do you live for? What would you die for? Now, that's pretty heavy, but what would you die for, if anything? What would you give it all for? These are pretty personal questions for you, right? So I don't want to put you on the spot, and it's a one-way conversation, so don't feel like you have to say it out loud, but you certainly would want to consider writing this down somewhere. At least just think about this. What cause do you live for? Now, these are tough questions. They run across existential themes like spirituality and meaning, and of course, referencing your purpose with every single decision, maybe overcooking it. The more significant the financial decision, the deeper you should go here. I know it's crazy, but the people that often have the most difficulty making significant financial decisions are the people that are most afraid to consider what their purpose is. If money is human energy and time, trading it for the fulfillment of purpose can provide significant meaning to your life. That's not a shallow, materialistic thing to say. That's just reality. So if you're trying to consider what your purpose is, ask yourself the following questions. And by the way, none of this is medicine that I haven't taken myself. Firstly, if every aspect of your life was already fulfilled, what would you devote your attention to beyond yourself? Secondly, what cause or belief would you be willing to stand up for if there was something that you did stand up for? Number 3, if you had a covert mission in life, separate to what your immediate circle of friends have and family would have, what would it be? What is your mission? And 4th, what ignites your passion? What fills you with a surge of energy and enthusiasm every time you get involved in it? So to give you an example, this is where I'll have to touch on my own purpose. And this is part of it, certainly part of it in the world that you would guess would exist behind the scenes. My purpose is to help caring and capable people fund their purpose. That's it in a nutshell, and I can say that honestly with my financial advice business and with anything I put out there in terms of social media and on this podcast. My purpose is to help caring and capable people fund their purpose. And I'm going to do that any way I can, and I'm going to keep on working on the goals associated with this purpose, even though sometimes it doesn't feel like I'm making much progress on it. So one of my goals is to build my business with other purpose-based advisors as well. Now, this is a really lofty goal, but it's connected to my purpose. My strategy then of using a portfolio approach to my time will dictate the speed at which that I could actually achieve these goals, which gives me peace knowing that no matter what, I'm still moving towards fulfillment of my purpose. Is it starting to make sense? You can use this in any area of your life, but if you're investing especially, think about what your purpose is, how your goals are connected to them, and the strategy that you think is appropriate to achieve your goals. So again, the purpose is the reason why you've been put on this planet. What provides meaning, and for whom are you living for? So now it's your turn. If you wanted to go further with this, just grab a bit of paper and figure out what your purpose is. Write down these 4 words. My purpose is to, and then just start writing. See what happens. I know it's a bit weird, but give it a go. I promise it will make you a better investor because it will influence your goals, which will inform your strategy. Purpose is the why, which anchors your specific goals to meaning. If you find it easier to start with goals, just ask yourself the question, why do I want to achieve these goals? All right, so I've just taken you through the hierarchy of investment decisions, this triangle with 5 sections starting with action, tactics, strategy, goals, and purpose at the very top. Remember, action is the quantifiable set of behaviors like how much you're investing, when you're investing, and where you're investing it, which is consistent with your tactics. Next, we have tactics, or the investment tools, activities, and decisions employed by your strategy. Next up, we have strategy. It's a custom-built framework based on principles or laws of money, which change over time, by the way, and we can use our strategy to achieve our goals. Number 2, goals. These are the specific events or outcomes that you wish to achieve or expedite within a certain defined time frame. Lastly, there's purpose. If all of your needs and wants were sorted, this is what you'd fight for, stand for, live for. This is the purpose of your presence on planet Earth. Remember, actions are important. If you don't actually do any actions, none of this matters. But remember, actions are also the set of behaviors belonging to a predetermined tactic which form part of a financial strategy. Your strategy is the framework by which you achieve your goals that are aligned to your purpose. I could just say that all day. So I hope you enjoyed that. That is an actual framework that I use with some of my clients to help them make informed decisions when it comes to serious money questions. If you want to reach out and arrange for your own coaching session around this, please do let me know. I'm a little bit inflexible in terms of how many new clients I take on. Thank the portfolio approach for my time there, but there's a link in the show notes if you want to learn more. Hope you enjoyed that one today. Catch you next time. Thanks for listening into the Everyday Investor Podcast. Like what you've heard, but you want more? Make sure that you've subscribed to our YouTube channel and subscribe to the Everyday Investor newsletter too. The links for everything are found in the show notes that you can access easily by swiping or tapping over the cover art in your podcast player. If you received value in some way, I'd love it if you could take the time to write a review wherever you listen to podcasts. Share it with a friend, or think of our show partners where appropriate. Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand. Gorilla Technology, increasing business success through innovative and strategic IT solutions. And Ungaro & Co. Financial advice for everyday people building everyday wealth. Remember, some investments or strategies discussed on these episodes may result in financial loss. Be sure to do your own research and ideally seek qualified advice of your own before making investment decisions. Hope you enjoyed today's episode, and we'll catch you next time around.